So another day in the market, and the S&P is down once again for the fifth consecutive day, closing red. 38 basis points. The Dow, closing in pretty much shy of. So yet another day, the S&P 500 is down. Today's the fifth consecutive day that it's been down. It's down 38 basis points. The Dow is down 50 basis points. The Nasdaq closing green, 18 basis points, pretty much relatively flat. The Russell 2000 down 39 basis points, and crude oil taking a little bit of a dip. So first, taking a look at the QQQ, which tracks the technology sector or the Nasdaq. Um, I mean, it's just horrible. It's horrible. We have these gaps that tend to fill. 80% of gaps fill. So relatively to down, other than up, I think we could see a dead cat bounce or surrounding the Fed meeting, which is tomorrow, or we might come down, and follow up. But I don't think the risk to reward ratio of it going down, other than going long right now, is kind of like 60-40%. More so like 70-30. Um, Same thing for the SPY. We have two gaps. If we break down and we just start capitulating down, the next support is 350. That's going to be a drop of another 6%, which is no surprise here in the market. I mean, we're down from all-time high. Uh, we are in a bear market and we are down 22% as of now. Um, so that's that, and the QQQ is down, I believe, around 33% from all-time high, or more. Yeah, 33%, which is more horrible than the SPY. Um, Something I do want to mention here is this chart that I've seen. Uh, this right here was the whole 2020 after the COVID crash. Let's just say it came down. We just saw this rally. People were hoping for recovery after the coronavirus, after the lockdown. The rally is real. Everybody was in disbelief. And then everybody got full invested, thrilled. They started buying more Euphoria. And you've seen these people making money, just thrown in the market and just making money without doing anything. You could literally just invest and you would make money. Like, it was that easy. Now it's a different story. If you're that type of person, you're gonna get wrecked. Um, People are saying we are around this level. I would say we are around anxiety, and now I don't think we're down to anger and depression yet. Because capitulation, I feel like we are literally around denial, panic, and getting to capitulation. I'm not saying this is the bottom. There's no one knows when the bottom. You can't time the market. The best way to go about is invest in stocks that you consider long-term holds, and DCA, dollar cost average, into them, and never look at them ever again. If you're a young person like me, I'm just looking to buy good quality stocks and never look at them until the next 5-10 years, and just go about my day. So looking at this, I think I think we're definitely in anxiety, denial, or panic, because people are just tired. They're just like, shit. Everybody's selling. I need to get out. And we're not quite capitulation where we just see straight down. Although we have seen pretty much straight down with no bounces. So you could argue that we are around this level, which I guess could be near the bottom, but who knows? Something else I want to point out is the seasonal patterns. Usually, well, this was we literally started like here down. There was no trending up in the beginning of the year. December, November was like the peak. But this is a election year, which is 2022. So the market tends to bottom around that June area, as you can see. So we are in June. So I guess we can expect a rally based on the charts and the pattern since 1971. But that's pretty much something kind of interesting to point out. We are we pretty much dipped throughout the whole year, the past 6 months, and according to this, it tends to be a bottom around that June area. Um, followed by a rally in September until September, October, and we see the nice dip again, which we know that September is pretty much the worst month for the SPY. Something kind of interesting to point out is this on the news that came out was this lady talking about where is it? We got a stupid ad. So this lady was talking about how people are starting to get concerned that these companies are not making money, which is inflation, and the interest rates are going up. So these companies are not making money; they're not producing any cash. So it's they're announcing that they're slowing down their growth. So this is concerning a lot of the people. So let's take a look at what she has to say.
We think that as you see slowing corporate earnings growth, a place to be is more defensive stance. And a lot of that reopening trade, the cyclicality we liked coming into the year and for the last year, I think a lot of that's been played out. I do think that people will still consider spending on services and travel, but it won't be as robust as we saw it in last year.
So I'm a beachside hotel.
So that's kind of interesting. What she's saying is that the people are kind of running away from technology, and I mean there's no place to hide in this market, but like I said, I think the best place to be right now is pretty much cash or in dividend stocks, which I am as well. I think people are going to continue spending money on your your cellular technology, not technology, your like Verizon's, what is the other ones, like consumer staples, but those are not doing terribly horrible compared to the S&P, which are holding better. So your stuff like Procter and Gamble, Verizon, what's the other one? What's the other one I was holding? I can't remember, but the stocks like that, I'm not recommending anybody to buy anything because um, I'm not a financial advisor. I'm just some dumb person, some dumb 18-year-old. Why would you listen to me? But yeah, I mean the Nasdaq is it's doing horrible. One of the worst performances in a very long time. So I think for all these young people like us, I think this is going to be one of the best opportunities to really make money in the upcoming years. This could take potentially 2 years. But markets usually don't recover that fast, like the 31 days it took when it was COVID. But I think this is going to be very interesting to experience, and I think people are going to have a shift in mindset when it comes to investing. Thank you so much for watching. Have a good day.